the Bangalore biologics facility, the timeline really for re-inspection of the facility by EU, and also in the update on the outstanding US FDA Form 483.
Sure. So in terms of the facility, as you know that the European authorities had inspected our facilities, and we received GMP certificates for our drug substance facilities. For our drug product facility, they had said that they would need to come for re-inspection after we had completed the CAPAs. Likewise, if you look at the US FDA, the US FDA had also inspected our facilities sometime in end of May, June, and had issued a Form 483 with a set of observations. Now, in response to both the European observations as well as the US observations, we had to undertake certain modifications of our aseptic facility. This did not impact our drug substance facility, nor does this impact Malaysia.
All right.
So these modifications are behind us. Now we completed them as we had guided last quarter. Now we are in the process of requalifying this aseptic facility in Bangalore, and we are on track to complete that.
All right. Also, we've seen that the licensing income has significantly come down this quarter. What would you really attribute that to? And what about where would the guidance for really FY18 stand in that perspective?
So licensing income, I think historically for us has always been lumpy, in the sense that as and when you close a deal, you recognize the income if there is an income associated with that deal. And these licensing incomes are essentially to do with partnering activities in emerging markets. Now clearly, if you look at our historical licensing income, it's been driven by our partnering activities related to the insulin, glargine and trastuzumab. And that is most of that has been done. So now it is more linked to as and when we get approvals, when do we get the milestone payments. So that is very hard to predict. It's very lumpy.
All right. Also there was some production disruption really led by the CAPA plan implementation. Will that really be a one-off affair, or would you see that really trickle down and have an impact on the coming quarters as well?
That clearly is related to the shutdown of the facility that we mentioned that we took last quarter. And this quarter we are in the process of requalifying the facility. So I look at it as a one-off.
One-off. All right. Also in terms of a near-term outlook for the biologics segment really in the EMs, what's the near-term outlook like?
I think we are still very positive about the biologics segment. The setback we had was related to the production disruption in the drug product facility here, which of course meant that we could not supply product and cater to the demand. As this facility completes its requalification this quarter, we would see an uptick in that business. The second impact in biologics is, of course, we have talked about certain delays in getting regulatory approvals or tender delays in emerging markets.
True.
So as and when these tenders open up and we bid for them, and as and when we get regulatory approvals, specifically in Malaysia, for our biologics products, that will sort of drive the growth in the biologics. So we're still very optimistic for growth in the next fiscal.
All right. Could you take us through what the core EBITDA margins for Biocon have been, excluding that of Syngene, and how do you really see the outlook for the next 1 year?
So as you know that our EBITDA margins are sort of fluctuate because of it has built into it the R&D expense, the licensing income. So if you look, and of course Forex. So net of these three items, our core EBITDA margin this quarter has been around 27%. And this core EBITDA margin should improve as our biologics business picks up, or because this is not impacted by licensing. So it's clearly will improve as we get approvals and as our biologics business ramps up. Our branded formulation business has already ramped up a bit. So as that returns to normalcy, we would see some benefit on the core EBITDA margins as well.
I was coming to the branded formulations business because that's really been one key positive for this quarter. It's up by about 29%. So will that really continue continue the sort of a growth that you're seeing in this segment?
See, we certainly see an uptick in the branded formulations business. We certainly see the growth continuing, but the growth of 29% has been to some extent abnormal, largely because it was a bounce back from the Q1 decrease impact of GST. So there is an element of a one-time bounce back, but on a more sustained basis, we do expect branded formulations to deliver reasonable, growth. So we are on a growth trajectory there.
Also, in this quarter, we have seen the submission of biosimilar insulin glargine really under the US FDA. Is this the same product that is available in the Japanese market? And how much time do you really see for the approvals to really come in for the other developed markets as well?
So clear, in terms, if you look at the submissions in the US and European markets, they are largely linked to the Malaysian facility.
Okay.
When we supplied Japan and we received approval in Japan, our Malaysian facility was not yet up. So to that extent, there's a difference. But yes, otherwise, we do look at the same product globally.
All right. Lastly, would you agree that the next 12 months will be very crucial for Biocon, because you have filed a lot of, a lot of filings have happened and the monetization would really start. So, will the next 1 year really be a very crucial one for Biocon?
See, we have always historically mentioned that, we expect to see a significant ramp up in our business outlook as and when we start getting approvals. We said that in FY19, a big chunk of that revenue of $200 million in biologics continues to be dominated by emerging markets. But post launches, because it's not so much approvals, it's also post approval, when do you launch? So the launch timing is dependent partly on approvals, partly on things like intellectual property and all of that. So clearly, as and when we actually launch products in developed markets through our partners Mylan, that there would be a significant ramp up in the profiles. Till then, most of the ramp up would happen through tenders or other penetrations in emerging markets.
Then it's later on that the benefits would really start coming.
Yes.
Works well. Thank you so much, sir.
Sure.
Wonderful
Thank
talking.
You.
We wish you best for the next
Thank
quarter.
You.
Thank you.